long. And I had been looking at this story for a while, the balance sheet roll off, and he was saying, which is very smart of him, like, basically there's a lot involved. Like, yes, we want to get the balance sheet down. We know that's our goal, but we don't want another 2019 repo crisis, which happened when they were doing QT and things got too restrictive in the banking system, let's just say simply. So as they roll debt off their balance sheet, you know, that money has to be pulled out of the system. And if it comes from bank reserves, then we could get more tightening of liquidity. And I think, Matt, I heard you talking earlier even about, you know, Treasury bill issuance coming. That's, you know, as they build up their cash balance again after that nightmare of the debt ceiling, we had that going on. So now we've got the Fed who's trying to get that balance sheet down. Their pace is about $1 trillion a year.
Sounds like a lot.
It's a lot, but the balance sheet is darn big, right? You
yeah.
know. But that they don't want reserves in the banking system to get too restrictive. So
it looks like they're moving pretty quickly already. Like if I type up Fed space BOW on the Bloomberg terminal, I can see that we were over $8.5 trillion, and we're pretty quickly approaching $7.5 trillion, you know, within the span of just about 1 year. So what's the problem with this? When they reduce their balance sheet, essentially they let the bonds mature, right? And they don't use that money to go out and buy new bonds. How does that suck liquidity out of the system?
Well, it can come in a couple of ways. That's why, to be honest, it's made this a little more precarious, because the Fed normally think about assets and liabilities on a balance sheet. The bonds are assets, liabilities, you know, things that if nothing else changes, assets go down, liabilities have to go down. So like a key liability is bank reserves, because if banks want their money, Fed has to give it back to them. So one way is the assets go down and bank reserves would go down as people like Treasury selling debt, people buy this stuff. But now we have this other thing called the Fed's reverse repo facility, another place that a lot of money market funds like, they put their money there. So they can buy some of this
So
debt.
That's on the liability side.
Yes, both our RRPs and the reserves are on the liability side. So
and that got huge, up to almost $2 trillion.
Yeah. Amazing. Remember when they first came out with this? You know, it was back when Bill Dudley was at the New York Fed, and he was like, "We don't want this to be too big,"
right?
And it's really big. I mean, it's working. It's helped them. Money market funds really love it. But so, you know, the more comes out of RRP as the Fed, you know, winds down the balance sheet, the less bank reserves go down. But we've seen that move pretty fast now. But people are warning, you know, money market funds might like keeping their cash in bank reserves, and the bill buying.
And that's helped with the Fed's balance sheet liquidity,
yes.
right?
Yes, because it's like one of those liabilities has to move. So if RRPs go down, then reserves don't have to go down as much. It's just kind of like the math and the way it works. So like Chairman Powell was saying on Congress, like, so far this is what we see. And I feel like he was very humble in a good way, and he said, but I mean, I remember writing it down. He really said that. Like, he said, we didn't see it coming in 2019, you know, like we thought we were doing okay. So he was like saying it's not easy. We're trying to be careful. We want a buffer of bank reserves in the system. And of course, like you guys have been talking, we got so much else going on, right? We got the Fed who raised rates over, you know, 500 basis points in over a year. We've got all these other dimensions, and we really don't need a repo crisis, you know? So, and the Fed wants QT to keep winding down. So, I mean, like I said, we tried to be very calm and fair. There's a lot of people saying it's going well now. Fed could, you know, they want this QT to just run in the background.
Can I ask you something? The Fed is always doing this, right? This is the management of the Fed's balance sheet.
Not at this scale.
But, well, that's what I'm going to say. What's different? Is it because of the scale and the size of the balance sheet that makes it more difficult?
Well, you know, so they're not always doing QT in a sense. They're either doing QE, stability, because sometimes they left the balance sheet stable for a while, or they're doing QT, making it smaller. But again, it's not at this magnitude, right? Because in the old days, when they didn't have the system they have now, there was not even trillions on the balance sheet. But now they're working in a different schema, so they're allowed to have a big balance sheet, but it's gotten bigger and bigger. But so it's the magnitude, and that I think we're just such a precarious time. The Fed also doesn't want their tools going in opposite directions. They're tightening with rates so far. You know, they haven't stopped. They said it's not a pause. It was a skip in June. People think more is coming. And they have this QT tightening they want in the background, not to create issues.
But they can slow it down at any point, right?
No, they haven't.
Okay.
But they could. That's another thing they could do. Say they start seeing, you know, kind of creaks in the system that bank reserves are getting tight. Some people have said said the Fed could say we're going to slow down the roll-off. We're going to roll off maybe half of what we're doing. So there are maneuvers that the Fed can do. I think Powell and Lori Logan from the Dallas Fed spoke recently and said, for now, we think things are working well, kind of plowing along. But I think a lot on the street are saying, just got to kind of keep that on the list of all the things we're worrying about.
So, but now that treasuries are actually yielding something, it's got to be so much more attractive for money market funds to move out of the reverse repo facility and buy them for a return, right?
Well, yeah, now that there's more bills, because remember with the debt ceiling, there wasn't enough to buy. It seems like, the government is so big, but the money market funds have nearly $6 trillion in assets now, so they had a lot. So you're right, Matt, the bill rates were more attractive, but somebody was saying, what also, I feel like there's so many variables here. What also is like unsure is money market funds are doing what they call extending their maturity, right? They're buying bills. Reverse repos are overnight money. They keep rolling it over. But people say, hey, if you think the Fed's going to raise 3 more times, why would a money market fund want to lock up right now when in 3 months they could get a better rate? So that's why some people are warning maybe they'll stop buying as much and keep their money in RRP, kind of like we were saying, keeping cash on hand, because, hey, if the Fed goes to 6%, I'd rather buy 3-month T-bills at 6%. So that's why I feel like there's a lot of uncertainty, and the Fed's being very cautious to watch and look at the market metrics and not have a blow up.
I love this quote in the story. Saying everything is okay is like calling the game after the first quarter. So, I mean, I always think about somebody listening who maybe isn't as savvy or just kind of understanding why this should matter.
As we are, right?
As we are. No, actually, you're right. Every time I read symbolism, I'm like, I know nothing. I know nothing.
Exactly. I mean,
but so help somebody who's sitting in the car and just like pulled over because I'm like, help me, I don't understand this. So what is it that they have to understand about the importance of something like this and what you write about?
Right. Well, I always think of my father, who's in his late 80s and a GE stock guy. He always says, Liz, I love what you do. I don't know what any of it means, but it's good stuff. But I try to explain to him, Dad, like things like this mean if the banks get under pressure, right, and it's more costly for them to borrow, they don't have enough cash buffer, bad things could happen, right? There's less liquidity. The financial system could be more kind of vulnerable. Like that, to me, is the broad thing. Because remember, in 2019, the Fed didn't want to have to plow money into the system like they did when the repos blew up. So they kind of had to go counter. It creates volatility, uncertainty, especially now. Inflation's still a huge problem, right? So the Fed definitely doesn't want to have to kind of come in and rush and inject. I mean, they did it during the regional banking crisis. They will do what they have to do. They kind of
they
stop
are the lender of last resort.
They are. They did that.
Is there something in the big banks when they report then in regards to this, and just got about 45 seconds, that you're going to be like listening out for that might give you some clues?
Well, yeah. I mean, they'll talk about reserve levels. I don't think we're there yet. There's still like $3 trillion in reserves, but if they're talking about a little bit reserve scarcity or that they want more cushion because they're concerned about the outlook, that'll be things that might kind of hint at, or is the financial in tighter lending standards, all that kind of stuff. We'll be watching.
That's what I watch for, tighter lending standards.
I know.
Because I still want to buy more cars.
I know you do.
They're cheaper now, right?
I don't have any money, so I have to borrow to do that.
Leverage. Hope it doesn't cost a lot. Truly, we mean it. We all get smarter when we read your stories. Liz Capel-McCormick, she's Bloomberg News chief correspondent for global macro markets. Her story, by the way, it is among the most read on the Bloomberg, has been there all day, and it really says a lot about kind of the environment we are, and just remind you of some other pressures that are out there, Matt.
Yeah, absolutely. I mean, this
Nothing
all
to worry
goes
about.
to, I think, tightening financial conditions, which is what the Fed wants to do, right?
Yes, exactly.
Type up FCON go, and you can see they still have a ways to go.
Slow down, everybody, slow down. All right, Carol Massar, along with Matthew Miller, and for Tim Stenovic, you're listening and watching Bloomberg Business Week on this Monday on radio, on YouTube, on Bloomberg Originals. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. We have got the S&P 500 index holding just above 4,400 right now, 4,404, up by about 0.1%. Stock market, however, kicking off the week on a cautious note. We've got the S&P, as I mentioned, up 0.1. The Dow, by comparison, up 0.5%, up 172 points. NASDAQ, little changed, up less than 0.1%, up by 7 points right now. Interestingly, though, the NASDAQ 100 index, full of big tech names, is trading lower by just about 0.1%. 10-year yield 4.00%, with the 2-year that's yielding 4.85%. Spot gold little changed, up 65 cents the ounce to $19.25. West Texas Intermediate crude down 0.9%, 73.16 a barrel right now on WTI. Bitcoin up 1.3%, 30,585 right now on Bitcoin. Investors will be watching this week's inflation data Wednesday and also Thursday for clues about where the Fed may be heading with its path of rate hikes. Amanda Lynham is head of macro credit research at BlackRock Financial Management.
For us, we've acknowledged that we're probably closer to the end of this hiking cycle, obviously, given the significant cumulative hikes that have already been achieved. So whether we get 1 or 2 more hikes throughout the course of the year remains to be seen. Probably the path of least resistance is for a few more hikes.
And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Bank stocks will be in focus later in the week when we get earnings Friday from JP Morgan Chase, Citigroup, and Wells Fargo. Right now, Citigroup shares down 0.1%, JP Morgan Chase up 0.3, Wells Fargo down by 0.8%. Briefly, Sega of America workers say they have won a union vote and will be joining the CWA. Recapping, S&P little changed, up 4, up less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Matthew Miller in for Tim Stenovic here on Bloomberg Business Week. Matt, I feel like we're ticking off our most read stories. We talked about the big banks, maybe concerns about higher capital requirements coming their way. We talked about Elizabeth Kaplan McCormick's story on the balance sheet. We've got to talk a little bit about China.
Absolutely. Well, it's a couple of fascinating stories on the terminal today.
Mm-hmm.
I think chief among them is the fact that Chinese inflation has fallen to 0. Right. So they could be looking at a move in the other direction.
All right, so let's get to it because we've got more on China, the impact it is too also having on global financial markets or how we kind of assess performance. Bloomberg News senior editor Chris Yancey is with us from our Boston bureau, along with John Authers, senior editor for Bloomberg Markets and Bloomberg Opinion columnist. He's here in our Interactive Brokers studio. Gentlemen, good to have you here. Chris, kick it off with us. Talk to us a little bit more about the economic disappointment that seems to continue to be China and its struggle to come out of the pandemic.
Yeah, so the latest one was the CPI. Last month I quipped that the 0.2% gain in China's CPI is what the Federal Reserve would like to see in the month-on-month U.S. CPI, but that was the annual one. Now, the latest number has come a tick down. 0.0 is the annual pace of inflation for China. And the reason why this is not a good thing, it's a bad thing, because it shows that China is kind of getting closer to this disinflation turning into deflation dynamic that some are saying bears parallels with what happened in Japan. You've got Chinese consumers whose confidence levels are extremely low. You've got their reaction to interest rate cuts being to raise savings, not to boost borrowing and spending. So you've got a few dynamics there that are very concerning.
So, John, what's the deal with inflation versus deflation? Because I was kind of raised here at Bloomberg professionally during the great financial crisis, and so trained to think that deflation is the big horror, and you'll do anything you can to avoid it. I remember clearly Ben Bernanke saying on 60 Minutes, inflation is no problem. We could stop that, turn it on a dime. So is that the case, or maybe China wants to hover around the zero bound?
Well, Ben Bernanke was, as an academic, became one of the world authorities on the Great Depression and the Japanese malaise, which are the two great occurrences when deflation happened for a while and caused damage. There are quite a number of other opportunities where you could look at it and see that inflation had caused a lot of damage. In the case of China, it's a poorer country, which means that policymakers really don't want inflation to get out of control. It did get into the 20s as recently, 20% numbers as recently as the 90s.
But with huge nominal growth.
Yes.
Yes.
So I doubt they are as totally concerned as people in the West are, because they still have this basic fact that you're more likely to get serious unrest, serious difficulties in the population if price rises become too unchecked. That said, plainly, China needs to keep ticking along and keep managing its transfer, and the fact that it's transfer from an export-driven economy to more of a consumer-led economy, and any sign that price rises have diminished, dwindled to that extent, is a symptom of their not getting what they wanted.
Chris,
I'm just wondering why they don't go with massive stimulus, because I read all those stimulus reports throughout the years. Every time I see something, I think, wow, that's pretty small. And I thought China was a very big economy. But compared to the kind of stimulus that we did, it's all looks tiny.
Okay, I think the single biggest point you need to bear in mind here, as I understand it, is that the Chinese authorities, whatever else you think about them, aren't dumb, and they beheld what 2008 Lehman, the Minsky moment of 2008, did to confidence in Western institutions, not just financial ones. The whole of architecture of institutional architecture of the West was terribly damaged by that, and they are really determined not to let that happen again. The only time I've heard an active central banker actually refer to a Minsky moment was the People's Bank of China about 5-6 years ago now. That is, there is a small c, very conservative streak going through the way the current Chinese leadership is managing. That's why you've seen them clamp down fairly aggressively, and so far without too serious side effects, if you don't count 0% inflation on real estate, which plainly at one point did appear to have all the signs that it could create its own Lehman moment there. So I think, in terms to answer your question, I think they know what they absolutely don't want, and that's to have their own Lehman, to show that they're no better than the West, and also what might happen to Chinese society if something as bad as 08 happened to their economy doesn't really bear thinking about.
Fair enough. And Chris, I do feel like there's things that China will let us know what they might do behind the scenes. So how do you guys and your team continue to assess, the true state of the Chinese economy and the impact it has on the global economy?
Well, I mean, you always, in terms of like the running assessments, you always have to take the official statistics with a little grain of salt, or sometimes a big grain of salt. But it's what we have. I think that generally speaking, most economists do see China's target growth rate of around 5% this year as eminently achievable. Probably a bigger question, and this is something that Janet Yellen picked up on, I think, when she was meeting with the new economic leadership team in Beijing the past several days. The bigger concern is where are we going over the medium term? You've got population dynamics that are not suggestive of rapid economic growth. You've got productivity challenges with the U.S. export controls, just one of them. You've got a private sector that doesn't really kind of know where exactly it fits in Xi Jinping's economy, given Xi's emphasis on the public sector. So I think, there are a lot of questions. There's reasonable confidence that China will grow,
Right.
about 5% this year. Where they go for the next 3 to 5 years, I think is a real question mark people are trying to grapple with.
Quick question from a viewer and listener. Can you ask if China will stimulate heavy to drive up inflation around the world? John, just quickly, do you think that's possible?
I think you were just explaining why they don't want to do that.
It's possible. I suspect they don't want to do that because they are small c conservative about managing their economy. I suspect they're more likely to export deflation, which for the moment in a large part of the world is actually quite they're being quite good global citizens if they export deflation.
Helpful.
Right.
Yeah.
Chris, do you have any thoughts on that?
Well, I think that the reasons why China has not deployed stimulus are really varied. I think John has walked through some of them very well. I think another consideration is they know that there is a big Social Security bill coming, so they're very wary about driving up debt levels now to stimulate consumption.
Right.
They are concerned about the debt overhang in the broader economy. So there for a whole lot of reasons, I think we aren't going to see broad brush, big, energetic stimulus from China.
So everybody give up, kind of pushing for it, because it feels like we keep doing that. John Authors of Bloomberg Opinion and senior editor at Bloomberg Markets, Chris Yancey, senior editor at Bloomberg News. Guys, thank you so much. All right, let's get a check on world and national news.
Yeah, let's do that. Let's get down to the 99.1 newsroom and check in with Dan Schwartzman. Oh, no, he's right here behind me.
That's right. I'm too close for comfort here to you, Matt, and to Carol as well. Breaking news as President Biden is in Europe. Reports say Turkey has finally agreed to advance Sweden's bid to join NATO after they received certain assurances. The breakthrough following months of back-and-forth negotiations as Turkey has been unhappy with Stockholm hosting supporters of Kurdish separatists in its country. Again, that has angered Turkey. President Biden, of course, beginning his European tour with a stop in England, where Biden met with King Charles III, as well as British Prime Minister Rishi Sunak. Reports say Sunak and Biden talked about the war in Ukraine, including the U.S.'s controversial decision to send cluster munitions to aid the seemingly bogged-down Ukrainian offensive. Both world leaders next fly to Lithuania for an important NATO summit. Sunak on that trip.
We head from here to NATO in Vilnius, where we stand as two of the firmest allies in that alliance, and I know we'll want to do everything we can to strengthen Euro-Atlantic security.
On that agenda, where NATO stands on admitting Ukraine. The Eastern Bloc countries want them in. The Western countries want them to wait a bit longer. A massive heat wave will be engulfing parts of the country this week. Temperatures expected to reach as high as 120 degrees in the southwest, with the choking heat then going to the Pacific Northwest later in the week. Places like Portland, Oregon can expect highs nearing 90 degrees. Excessive heat watches and warnings remain in place in parts of California, Nevada, and Arizona. Meanwhile, it's not much better here on the East Coast, especially the Northeast and parts of New England, as 14 million people are still under flood alerts in those areas. An accused murderer, by the way, on the loose in California after he escaped from Sutter Medical Center near Sacramento. He's been charged with murder and attempted murder as well. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Dan Schwartzman. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 3:40 on Wall Street, and we've got 20 minutes to go ahead of the closing bell. Let us head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. The Dow is outperforming in a quiet session for stocks. The Dow is currently up 177 points. S&Ps are higher by 5, and NASDAQ is climbing by 8. The U.S. 10-year yield falls to 4%. Gold is little changed. Oil trading in the red, and Bitcoin is higher by 1.3%. Of the main 11 S&P sectors, leaders were industrials, energy, and healthcare. Telecom and utilities led to the downside, and leaders to the upside in the Dow, Intel and Amgen, while Verizon and Microsoft were under pressure. In deal news, Nano Dimension boosted the offer for Stratasys to $24 a share. And in other news, FMC cut its Q2 revenue views. Shares fell as much as 15%. In the EV space, Rivian rose for a 9th day, its longest winning streak ever. And wrapping things up, WD-40 reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just under 18 minutes left in today's trading session. Carol Massar along with Matt Miller. Matt, of course, in for Tim. Let's get to it. And our Drive to the Close guest, Abhay Deshpande, back with us, founder and chief investment officer at the registered investment advisor Centerstone Investors. Abhay, you might recall, a global value investor, and he's back with us on Zoom in New York City. Abhay, nice to have you here on this Monday. How are you?
Doing very well. Thanks for having me.
Well,
in the deluge.
Yes. This market environment, is it tough for you to find opportunity right now as a value person?
Not really. I mean, we're global investors at Centerstone, and as you mentioned, we're value investors, so we're price conscious. And I mean, in the international world anyway, there's still plenty of stuff that's out there. Plenty of parts of the world that have kind of been disappointed by the rather slow reopening kind of trade that people have been pricing in at the beginning of the year, which means a lot of disappointment still. So whenever there's disappointment, that means there's stock prices, which may be kind of focusing too much on short-term kind of things and missing a larger trend. So we're able to find plenty to do right now. That said, we're long-term investors. When I say plenty, I mean we can find something new every month or so to buy.
So one of the things you like is Riley Automotive, and somebody was talking this morning about how used car prices have fallen recently, but I note that most of the used cars I look at still cost more than the new model, the exact same one, because the market's held up so well. Why do you like O'Reilly?
So O'Reilly, it's it has a very passing kind of correlation to used car prices. But it's very indirectly related to that. It's mostly more directly related to the. Well, let me back up. They sell auto parts to do-it-yourself kind of tinkerers, and also to mechanics who are going to fix your car for you. And generally speaking, the longer the longer the age of the vehicle on the road, the more likely it is to need parts.
And that number continues to grow. What are we at right now? 12 years?
Yeah, like 10 and a half, 11 years, the last I looked, I think it was 11.2 or something. So it's extended. I mean, it's well beyond the 7 years that it used to be, maybe a decade ago. So that, that is related to the price of used cars, right? Like the more expensive they are, it's harder for people to kind of turn their cars in. And beyond that, just the financing for new vehicles it's tougher and tougher to qualify. So on balance, those two, one kind of a longer trend that's been in place for some time. It's extending the age of the fleet, but at the same time, the difficulty in just turnover in the car market makes that tailwind more sticky.
I mean, I get why more people, Abe, I get why O'Reilly's attractive. And, you know, as cars are now so expensive and getting qualified to take a loan to buy a new one is harder and harder, you're going to work on fixing up the car you have. The thing is, yep. I've been hearing people say this for a long time about O'Reilly, and the stock has done really well. It's not a value stock, is it? I'm looking at a chart right now coming from a year ago at 650. Now it's trading at 961.
Yeah, I mean, it's clearly, it's not what it used to be. It was 13 or 14 times earnings when we bought it, maybe 7 years ago or something. And at that time, there was you know, the eye was more on the potential inroads that Amazon was going to make into their core business. Now that ended up being a kind of a non-event, but it was enough concern to drive the stock down to 13 times earnings, where you know, people just ignored the longer term, you know, these trends that we've been talking about. But also in the space of auto parts retailing, O'Reilly, to us anyway, appears to be the highest quality. I mean, they've got the shortest time to market. It's built to supply the industry, mechanics who need parts and turn, you know, within an hour. Like, it's the only company can consistently do that. So they've just continued to gain market share, and what they've done is, I think, shown people that their business model makes this much more of a franchise than it does like a what you would maybe associate with auto parts, which is like a more cyclical business. That's allowed the multiple to expand. So it's tough, as you said though, Matt. I mean, it's tough to say at 26 times earnings that this is like the cheapest stock in the world. But it's a high quality franchise, and I think it still deserves the multiple that it has.
Does it freak you out though a little bit when Advance Auto came out and they had some disappointment and it dragged the whole sector down? Does that potentially bode well, or bode poorly rather, also for O'Reilly, Abe?
Well, we did, you know, there was a moment there where we're like, oh, what did we miss? Is there something going on that we didn't see? But, you know, we're familiar with all of the companies in this space, and AAP has had its own kind of issues. I mean, they're very internal to the company, and I don't think it seems to not reflect on the overall state of the market, and maybe more so on their just internal upheaval.
Software One. I want to go there because it's not a company that I was that familiar with. Swiss-based company, IT services, but it sounds like that there's a specific news event that is got you thinking about this one or interesting, and we're talking about this unsolicited offer from Bain Capital.
Yeah, so we purchased it before that. I mean, the stock has run up a lot since we bought it, but originally when we bought it, it was another one of these things where we thought that there is an underlying, like a good franchise underlying it. There's this sort of software as a service kind of business that they're involved in, and but at the time it was being overshadowed by the very sloppy financial management of the company. They're growing very rapidly, but their expenses were growing way too far ahead of their actual sales growth. And so the margins were always underwhelming. People couldn't quite figure it out. Then they got a new management team that you know, pointed out the very obvious problem, which is a gross margin problem, the expenses that they needed to manage, kind of, you know, sort of third grade financial management, really. And he very quickly, that new management team, a new chairman, sort of settled things and have put the company on the right road. The stock's been recovering, and that came to the notice of Bain, who put in I think what's broadly agreed to be a lowball offer. I don't think they're way off the mark, but you know, if they want a chance of success in acquiring this business,
right,
they'll have to bump that up. If not, we're perfectly happy. I mean, they're just starting the whole you know, financial management process, you know, to right the ship. So I mean, there's plenty of upside still, even if Bain doesn't happen.
All right, we're going to leave it on that note. Always good to get into some specific names. Abe, thanks so much. Abe Despande, founder and chief investment officer at Centerstone Investors, joining us on Zoom from New York City. New York City.
New York City.
I have a car that's 10 years old. We just keep plowing money into it.
That's what people do with old cars.
company news headlines on Bloomberg Radio.
Bloomberg World Headquarters. I'm Charlie Pellet. Meta Platforms' Threads app has exploded on the digital scene in its first few days, topping 100 million users. On a post on Threads, CEO Mark Zuckerberg said the service reached that number over the weekend. He said that's through mostly organic demand, and Threads has not even turned on many promotions yet. Meta Platforms up now by 0.8%. Union Pacific Railroad has reached a tentative deal with a major union regarding paid sick leave. And with that story, here's Bloomberg's Dan Schwartzman.
Charlie, the railroad and the International Association of Sheet Metal, Air, Rail, and Transportation Workers said that the deal reached over the weekend provides up to 8 paid sick leave days to around 5,900 railroad employees. While all Union Pacific employees receive some form of paid leave, the proposed agreement will provide the union members an additional 5 paid sick days annually, prorated for 2023. Starting next year, they also will have the ability to convert up to 3 paid leave days for use as paid sick time. If ratified by workers, Union Pacific will have paid sick leave agreements in place with all 13 of its labor unions, making it the second railroad in the industry to do so. Charlie?
Dan Schwartzman reporting, and shares of Union Pacific up now by 0.9%. A topic we were just talking about, used car prices in the U.S. fell 4.2% in June from May, the largest drop since the pandemic began. Shares of Carvana, they're surging 17.1%. CarMax up 1.7%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, in just a few minutes, we're going to head over to our TV team, colleagues, count you down to the close on this Monday as we are tick, 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 waiting for earnings to get underway. In the meantime, tick, 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 Margarita Resort, Times Square Hotel.
Margaritaville,
sorry.
It's a very important part of the name.
Margarita.
No, this is Jimmy Buffett's place.
Tim and I talked with him when it opened up, and he was really excited and all this good stuff, but it filed for bankruptcy, the owner.
I have never been there. I don't think I would ever go to any restaurant on Times Square, to be fair. But if I were going to, it would be Margaritaville.
It looked like fun.
I like Hawaiian shirts, you know. I like to wear
you
a
wear
lei.
a few.
I like to drink rum-based adult beverages, but I can't imagine that everybody on Times Square would want to.
Yeah, I have to say, it seemed a little odd. It was very kitschy, as our story writes. I only saw pictures of it. Like I said, we did talk to Jimmy Buffett about it. He was pretty excited. I mean, he has fans who are truly fanatics, when it comes to him. But I don't know, is it enough to kind of keep an outpost in Times Square going when you have a lot of other choices? I mean, it's lost money. It's not gone well.
Yeah, I can't imagine. I also can't imagine a fanatic Jimmy Buffett fan. Is there really such a thing? I mean...
Well, what do you mean? You mean because they're
I get that there's fanatic fans of the Stones and of the Dead.
Remember Mike Schneider who used to work here? He was really into Jimmy Buffett.
Can you be really into Jimmy Buffett?
I don't know, guys in the control room.
Anybody?
Can you be
They're
really
all too
into?
young
Do you even know who Jimmy Buffett is? Jinx. It was 230 guest rooms, 34,000 square feet of retail space.
There's a hotel. But here, if I want to go to a hotel in Margaritaville, I want to do it in Key West.
I know you want to be
in the middle of dirty, stinky, smelly Manhattan on Times Square, no less.
I want to say that they even had a little beach there.
There's no place that's less chill than Times Square in the middle of Manhattan. That's the least chill place in the country.
Maybe that's why it was perfect. You want to chill out,
you need a
go
little respite.
there. Anyway, filing for bankruptcy. And so there's a foreclosure auction. So if you're interested, put your bids in now. All right, guys, we're going to talk about the close of the markets. Just got a few minutes left in the trade. Right now, we're heading over to our TV colleagues. That's because Beyond the Bell, it starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with our friends, Carol Massar, Matt Miller, as we count you down to these closing bells. Welcome to our audiences across all of our Bloomberg platforms here. Carol Massar, Originals, TV, and Let's not forget radio, because as Matt reminded us, you too also have conversations on radio.
We do, indeed. Even among the most read stories. It's a tough Monday, guys. Hey, I'm looking at the banks. I'm thinking about the bank earnings that are coming up later in this week, and also about expectations from the Fed's chief banking regulator about, higher capital requirements. Anyway, a little bit about wah. They're just up about 0.1%. So we'll see what they have to say, Matt, later on this week.
Yeah, I mean, I'm looking for the CPI numbers, right? I feel like you could see volume a little light until then. I know that NASDAQ volume right now is kind of popping, but until Wednesday morning, there's not much to give us a clue about which way the Fed is going to go, which way...
Maybe a few Fed speakers might give some clues?
I guess they'll telegraph that. That's how it works right now.
Matt, speaking of radio, I mean, you were on TV a little earlier, and I thought it was interesting, that interview you did with Matt Winkler, our editor-in-chief emeritus, kind of putting into perspective some of the bets and, more importantly, some of the wrong bets that were made in the bond market on this.
Yeah, absolutely. I mean, so many people last June, this week a year ago, actually, inflation came out at 9.1%, right? And so many people said the Fed was behind the curve and they made such huge mistakes and blunders, and we were definitely headed for a recession. And now we're back down to maybe 3% CPI, and it looks like the economy is doing pretty well.
All right, we are getting the closing bells here in New York. The Dow Jones Industrial Average in the green on the day, up about 200 points, or 0.6%. The S&P 500, which had been oscillating between gains and losses for a good portion of the day, also finishing in the green, up about 0.2%. The NASDAQ Composite up about 0.2% as well. And the outperformer, pretty much from wire to wire today, was the Russell 2000. It's going to close higher by about 31 points, or 1.6%.
Hey, looking at apparel stocks, I'm going to get into it a little bit more in just a moment, but they were really an outperformer. It's just got about 7 names, I think, in the index, but it was up almost 3% in today's session. A lot of it maybe having to do with Ralph Lauren on a high and just some recovery after the selling off last week, Matt, when we saw some disappointment over Levi's.
Yeah, absolutely. Take a look at the group ranked returns on the S&P. This is the individual industry groups and how they're moving. Industrials fare the best today, with healthcare and energy also leading the way. Interesting that financials didn't do poorly. You can see they're up about 0.4%, even after we got insistence that more capital requirements are coming from Michael Barr. Down at the bottom, you see communication services, utilities, and IT.
All right, guys, let's get to some of the individual gainers, if we may, in today's session. Rivian Automotive, we've all been talking about it. This one, a record rally. It's continuing. We're talking about 9 consecutive days of gains, adding another 3% onto the rise in today's session alone. Stock up nearly 100% since June 26th. So it's coming off its best week, by the way, since its November 2021 debut. So really such a tear here. Company coming out, as we know, we talked about this, I think, last week, building more battery electric vehicles last quarter than Wall Street had anticipated. Also shipping its first commercial shipments outside the U.S. Our Ed Ludlow has been on top of this company, talking with the CEO, and there's some great write-throughs. So check it out on the Bloomberg and at Bloomberg.com. Lucid, staying in the EV space, also that rally continuing. It was up about 6.5% in today's session. It's up 9 out of the 10 past trading days, up more than 40% in that time frame since announcing that EV supply pact with Aston Martin. So that's on a tear. And then for something different out of the EV space, if I may, I talked about the apparel companies really outperforming today. Ralph Lauren, one of the reasons why, hitting a 52-week high, number 4 gainer in the S&P 500. And this coming despite some disappointment last week from Levi's. We talked about that. The space was under pressure. I didn't see any real news here, if you will, but they are returning to Fashion Week. The last time they were there was September 2019. So I don't know. Maybe it's just a little bit of a bounce back. Maybe it's just a little interest among investors there.
Let's just go with that, all right? Fashion Week.
Deal.
I'm taking a look at decliners, and of course, what's interesting here is that 6 out of the 7 mega cap tech names are in retreat. Meta is the only one that managed to escape the declines, but Amazon is down before its Prime Day sale starts tomorrow. This has become the trend where in the past 4 years, Amazon stock tends to fall in the week of the 2-day sale as investors put more importance clearly in its cloud business than it does in the e-commerce business. We're also looking at the fertilizer makers, FMC and also Corteva, both lower. FMC slashed its quarterly and full year forecast. Notably, it cut its second quarter EBITDA guidance by about 50%, saying there was an abrupt and unprecedented drop in volume in 3 out of its 4 of its operating regions. So fertilizer companies as a whole declined in mass. And Mercado Libre down about 6% as B of A downgraded the LATAM e-commerce retailer to neutral. The analyst says that there's some new cross-border tax rules that could be a potential headwind for the company because it allows for competition to come in and maybe take some market share.
We talk about what's going on in the yield space. Of course, when we came in this morning, it was all about that data out of China that really drove what we saw in the treasury markets. But by the time you got to maybe 9, 10 a.m. here in the U.S., New York time, those trades began to unravel. You saw some buying going in pretty much across the curve. Your 2-year yield down about 7, 8 basis points here on the day. Your 10-year yield down by about 6 basis points here on the day. Again, you put it all together here, and this does look like a bit of a holding pattern. Everyone just kind of circling around as they wait on that next big economic data point and, of course, the start of earnings season.
And it's really earnings season that I'm intrigued by. I mean, I don't know about you, but it's the banks and what they say about how consumers are holding up and what consumers are doing in terms of paying off their credit card debt or perhaps rolling it over and just paying the minimum payments. That's going to be key for me.
Yeah, absolutely. I mean, we have seen a big uptick in delinquencies on things like car loans, and at the same time, we're going to start to see student debt payments come back into play. So I don't know about this past quarter, but I'll be very interested to see how banks are looking at the credit conditions going forward.
Yeah, the commentary overall, right, about the outlook, what kind of visibility, what's the environment like. This is going to be important as we kind of add that, layer that on top of some of the economic data points we get this week and the Fed conversations, Romaine, that continue to kind of, I feel like, maneuver us and remind us that, hey, folks, we're going to continue to raise rates.
Yeah, I mean, I'm kind of over the Fed conversation just because I feel like at this stage, like I said, whatever effects that 5 percentage points of rate hikes had, I'm not sure another 25, 50 basis points is going to change the equation much. But I am curious about the messaging going forward, not just about the rate hikes themselves, right? The idea here is that when do they sort of give a little bit more, I guess, of how they feel about the economy rather than just trying to, I guess, blow smoke up us, saying, okay, you know, don't worry about this, don't worry about that, everything's fine. Everything's not fine. And that's fine.
Resilient.
Yeah,
well, look at the unemployment
right, exactly.
reports.
Yeah.
We talked about this, right? If you start to go into the details, you realize for some sectors of the economy, whether it's African Americans, whether it's other individuals, like it's really tougher. And so when you start to get into the details, you realize it's not okay for everybody.
And then you had Yellen, the Treasury Secretary. I know she's removed from monetary policy, but the interview she gave, I think, was on one of the Sunday talk shows, where she kind of said, I think what we all are thinking, which is that, yeah, a recession isn't necessarily out of the cards. You can't necessarily price that out, and it's something that you have to prepare for.
Yeah, well, and we were just talking with Abe Despande over at Centerstone Investors, and he's still worried about the regional banks. He reminded us that's not something that's necessarily off the table yet. So mark to market could be very painful for a lot of these banks.
Matt, you mentioned used cars and some other things. I forgot who brought it up, but you know, to see the latest consumer borrowing numbers and those were down, and it raises a lot of questions as to were they down because consumers did not want to borrow, did not have the capacity to borrow, or was it because or was it the other side of that equation?
Is it a leading or lagging indicator at this point, right? Yeah, I'm intrigued by the regional banks too because given what Janet Yellen has said about how there's going to be a lot more consolidation, what's going to be the catalyst that sparks that consolidation? Is it going to be another shoe that drops, or is a company just going to go out and make a bid on its own?
Yeah, I think it's interesting when you think about consumers and consumer spending. As we've all talked about, you know, you go to an airport, they're crowded. People are out there and they're spending their money going off on experiences like we all expected. But, you know, do we all of a sudden see things to start to a retrenchment, if you will? And I think the airlines are going to be interesting. We get an airline also this week to see whether or not things are starting to slow down. Yeah.
and how much are they putting on credit cards, right? Because the big debate right now, or maybe it was the big debate last week, I don't know if it's been decided, is how much excess savings is left on the consumer's balance sheet. And the San Francisco Fed says enough to last through the end of the year, but down in Washington, the Federal Reserve Board there did a study that says they're already gone. So yeah, it'll be interesting to see what the banks say. We're waiting, right? We're waiting for, when do they come out? Wells Fargo, JP Morgan, and Citigroup on
Friday.
14th, on Friday.
That's Friday.
I just want to know, did any of you go to the Margaritaville Resort and Hotel?
Ever? Has
in
anyone
Times
ever been to
Square?
that place?
Yeah, that was a quick turnaround
I know.
for our listeners and viewers.
Yeah.
That they basically filed. Are they filing for bankruptcy?
Yeah.
Okay.
And that was pretty quick.
And that was then they just opened in 2021 in the middle of the pandemic.
Times Square.
Maybe wasn't
Bad
the best
timing,
idea.
but also.
But it was in Times Square.
Jimmy Buffett and Margaritaville, that's like a chill vibe, right?
Yeah, but
Times Square is not a chill
is it a
vibe.
chill vibe in the middle of Times Square?
Exactly.
I mean, I don't know.
Exactly what you need.
I mean, if I'm coming to New York and I'm staying at Times Square, I want the seedy New York experience.
Yes.
You know, put me in a flop house and
The Chelsea, right?
with the attics down there by Penn Station.
All right, I need to figure
Get
this
real
out.
New York.
I got to Google Flop House.
New York
All right,
is
guys,
back.
that is a wrap. Our cross-platform coverage.
Carol Flop House, Miss Escargot over there.
I'm gonna Google. All right, that's a wrap. Our cross-platform radio, TV, YouTube, and Bloomberg Originals. Catch us, the gang, tomorrow for Beyond the Bell and Countdown to the Close. As we get ready for those big banks to report, this is what we were all just talking about. So we wanted to get kind of a check on the overall environment, Matt. Get ready for that new earnings season.
Yeah, very much looking forward, although it doesn't happen until Friday, right?
Yeah, well, we get...
Are we going to be looking forward to Friday every day this week? We just started. It's only Monday.
Hey guys, rewind, repeat. That's how this week is going to be. All right, so let's see what our guest has to say. Roberta Goss is Senior Managing Director, Head of the Bank Loan and CLO Platform at Pretium, which I think will be very interesting to see what she has to say. It's a specialized investment firm with approximately $50 billion in assets under management. They focus on U.S. residential real estate, residential credit, and corporate credit. In December, she was named one of the most notable women on Wall Street by Crain's New York Business. She joins us on Zoom in New York City. Roberta, nice to have you here with Matt and myself. Welcome. How do you see the environment from your vantage point? And remind us exactly what you see and what you do at Pretium.
Sure. So, hi, Carol and Matt. Thank you for having me this afternoon. So my group invests in leveraged loans. So predominantly instruments that make up LBOs and leveraged credit. Very diverse group of industries, but I think very impacted by, as you said, the earnings cycle. So far this year, that's been above expectations. I think most companies have exceeded expectations. And I also think the regional bank crisis and the health of banks has been a big impact over the course of this year, and pricing in the loan market more generally.
So how have leveraged loans been doing, especially as everybody's so freaked out about commercial real estate, and a lot of those loans, I guess, were floating rates. So borrowers got in near zero, and now they're looking at...
Not near zero.
Yes.
At zero, yeah. So leverage loans this year have actually performed quite well. Through the first half of the year, the leverage loan index up close to 7%, 6.75%. But that was with some degree of volatility. So as we went through the regional bank crisis in March, the loan market went from a high of 94 to a low of 92 and have largely recovered back to the highs of February. That has been almost entirely driven by corporate earnings as we went through Q4 and Q1. But I would expect a little more volatility as we go through the back half of this year. But I don't believe it will be as noted as we saw in March.
But why, Roberta, is that because companies were doing so well that they're able to continue to meet their to make payments? Because if you borrowed money for say 4% and now you're paying 12, that's
problematic.
That's painful, right?
It is. What is really driving the sort of exceeding expectations over the course of this year is that we already experienced a lot of volatility through 2021 and 2022. And I've talked about this in the past, which is this is largely a function of corporate margins, which were dramatically compressed over the last really 24 months. We're starting to see as inflation starts to ease, that's helping on the margin side, even as we're seeing the top line start to decelerate. On the interest rate impact, yes, we've seen LIBOR effectively go from 0 to mid 5.5% over the last year. And most, I would say 50 to 60% of most companies' total loans outstanding in the loan market are hedged. That being said, there's some companies that are completely unhedged. But most leveraged companies raise liquidity well ahead of expectations and need.
So in other words, a lot were already doing that?
Yes. So we've seen companies, as a result of the inflation pressures, really try to raise cash out of working capital. So raise liquidity in the loan market. And I think the majority of businesses are well positioned, even with sort of continued rate hike expectations over the balance of this year.
So I am curious, what's the demand? What's the default rate that you are seeing? Give us an idea and what it tells you about maybe more broadly the health of maybe the corporate market.
Yeah. So I think one of the indicators that we look at, or one of the stats we look at every day, is the percentage of loans that are trading below 90. So 90 being a level where stress starts to become a concern for a company. In the mid sort of lows of March, when we were in the midst of the banking crisis, that percentage reached over 20%. Since then, and as of this week, that number has reduced to 13%. So we still think that defaults are on the rise. We're calling for 3.5% this year, so effectively a doubling from where we are mid-year, and then accelerating next year to 4.5%. And I think one of the key differentiators this year is going to be what's the expectation on the recovery from those defaults, which we believe will be substantially lower than the historic average.
Not great.
We're calling
not great, then, right? Not great.
Not great. But we think that earnings will continue to drive the market. We've seen very little primary supply. I think the one big announcement last week, and this goes to your commentary around banks or banks prepared to lend, the large money center banks underwrote or it was announced a very large LBO, the first we've seen over the last couple of years to be announced with the acquisition of WorldPay out of Fidelity National Information Systems, with the expectation that that will bring somewhere on the order of $9 billion of new debt to our markets.
Do you think that's going to continue? Is that the beginning of a new trend?
I believe it could be, yes. So this is a deal that's slated for after Labor Day. And I think that this could be a signal for more new transactions to come. Yes.
Cool. All right. Well, something to mark our calendars and keep an eye on. Roberta, thank you so much. Come back soon. Roberta Goss, she's Senior Managing Director, Head of the bank loan and CLO platform at Pretium, joining us on Zoom from New York City. I love things like that because it just gives me another view, right, on like the health of how things are.
Yeah,
or how things are out there.
Especially considering how interested in private credit you are.
I am interested. Can they solve everything, Matt?
No, definitely cannot.
Can we have a clearer picture of what they're trying to do?
No, we cannot.
Apparently not. All right, everybody, more to come. Carol Massar along with Matt Miller, in for Tim, as you know. Carol, you are here on YouTube, Bloomberg Originals, and of course on Bloomberg Radio. This is Bloomberg Business Week. It's a Monday.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. After a three-day slide for the S&P 500 index, it was an up day today. S&P 500 index advanced 10 points, a gain of 0.2% to 4409, back above the 4,400 threshold. The Dow up 209 points today. That was a gain of about 0.6%. The Nasdaq Composite Index up 24 for a gain of 0.2%. The NASDAQ 100 index, which spent much of the day in the red, did turn around in the final hour or so, up 8 points today, up by about 0.1%. 10-year yield 4.00%, with a 2-year 4.86%. Spot gold little changed, up 20 cents the ounce to $19.25, while West Texas Intermediate crude today lowered, WTI down 8 cents, 73.18 a barrel on WTI. Bottom line here, stock market kicking off the week on a cautious note. Traders sifting through remarks from a slew of Fed officials while awaiting key inflation data that begins Wednesday and, of course, the start of earnings season. Recapping, stocks higher today with the S&P scoring a 10-point gain, up by about 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Matt Miller live in our Bloomberg Interactive Broker Studio.
Someone brought in a cart full of nerds. So I watched these guys wheeling a cart past my desk with boxes stacked.
And that for the international audience is what exactly?
The candy that's basically just sugar with flavoring and coloring. So I watched these boxes go by and I said, guys, how many nerds do you have? They said, we have about 2,000 boxes of nerds right here.
Is this stuff that was supposed to go to the food court?
I don't know where it was going, but I grabbed a box quickly. So I now have about 50 boxes of nerds at my desk.
It's crazy. Walked in here with like, what was it, 10-pack or something?
A 50-pack.
A 50-pack. Yeah. That's crazy.
Nerds.
All right.
It's like out of my distant childhood. Where's the double bubble? Where are the Pop Rocks?
They had sweet tarts and they had some sort of ropes, but I'm not sure. I just grabbed the traditional nerds.
Like licorice ropes?
Watermelon and cherry.
Okay.
All right.
So let's focus, team, because our Bloomberg New Economy team, speaking of teams, recently wrote on the Asian tiger economy that never quite roared, also why China is increasingly on the back foot, something we touched on a little bit earlier, and on Canada pushing back finally on Chinese interference. There's a lot going on there all over it. So great to have back from his travels, Bloomberg News editor-at-large and Bloomberg New Economy editorial director Eric Schatzker, back here in our Bloomberg Interactive Broker Studio.
Yes, that was my voice you heard earlier.
How are you?
Doing well. Happy to be here.
Well, it's good to have you here. We've been all checking out some of your newsletters. Matt confirmed that he read all of these 3 stories, so he's prepared. Where do you want to begin?
Well, I think I want to point out the fact that almost everything we cover at Bloomberg New Economy in one way or another dances around or directly addresses questions concerning China. So in the newsletter I wrote about Canada's relationship with China and where it stands right now, that's obviously about China and in fact has to do with Canada's concerns that China was interfering in its domestic affairs in a very, to the Canadian sensibility and frankly that of any other democratic economy and society, a very offensive way. But the Asian economy that didn't roar is about Thailand. Mm-hmm. But the context for that, of course, is China. What Thailand could have had over the past quarter century is what China attracted in the way of economic development and economic sophistication. And then, of course, China being on the back foot economically is very much an issue right now. You may have been talking today, and others may have noticed
we talked to,
that the Chinese economy just registered zero consumer inflation in the month of June, and a drop in producer prices of 5.4%, the biggest since 2015. And if that isn't, that should, if it isn't already, set off alarm bells. You have an economy that's struggling to grow out of COVID zero. You have Chinese state media, a Chinese lender, a Chinese macro hedge fund circling the wagons, criticizing Goldman Sachs for raising the alarm about potential losses that Chinese banks may suffer due to a concentration of government debt that may go bad. This is all, again, it's all about China. It's all very fascinating, but the reason everybody needs to pay attention is because the Chinese economy is not roaring back. And if this continues, it doesn't just present issues for the global economy, it presents issues for Xi Jinping.
Right.
Xi Jinping needs economic growth.
John Authors pointed out at least they're, in a sense, being a good global citizen by exporting deflation right now, the time when we all need a little bit of.
That's a classic John Author's perspective.
But you know what? All of this boils down to the fact that China was getting a little bit too competitive and maybe not necessarily following the rules to do so, right?
Well, there's so many reasons for why the United States, for example, the Dutch, the Japanese are taking this very constrictive approach when it comes to exports of high tech to China, or for why Janet Yellen framed things in the terms that she did when she went to China. For example, directly addressing what you just referred to, Matt, which is this idea that the West is trying to throttle the Chinese economy. She said, far from it. We aren't, trying to seek economic advantage over China. We are imposing very targeted measures that, at least, as far as she's prepared to say publicly, have only to do with China's potential misuse of certain technologies, semiconductors, AI, quantum computing, for military purposes.
Isn't this what you get, though, after years and years and years of kind of looking the other way because you had so many global multinationals who just wanted to set up shop, U.S. giants, corporations as well, everybody looking the other way because they wanted their footprint in China, assuming they were going to tap into that domestic audience or domestic consumer, and here we are.
Well, they wanted that, and they also wanted cheap prices.
Correct.
There's no question that
we all benefited, right?
Of course, the trade policies that were put in place over the course of about a quarter century, led to, as we experienced it personally, a couple of decades of low inflation, and then that was, to your point, Matt, effectively exported deflation.
I mean, I found all these stories very interesting. Thailand, especially, I think, because they're not benefiting from, the diversification out of China that.
No, they aren't. Not like India
are.
is.
Right. But to me, the one thing that I found most interesting from your perspective is what's going on in Canada. Like, they have had, I think, an odd relationship with China for years now,
they have.
Which was first highlighted to me and I think a lot of other people when they were supposed to get rid of Meng Wanzhou, right? Where they were when the Chinese wanted them to send her back.
That's right. So let's refresh everybody's memory. Back in 2018, there was a U.S. extradition request for Meng Wanzhou, who is the daughter of Ren Zhengfei, I believe that's, if my memory serves correct, that's his name. He is the founder of Huawei, one of China's tech giants. And the United States had an issue with Huawei and Meng Wanzhou specifically around stated business that the company did or didn't have in Iran and the way that it was or wasn't trying to skirt American sanctions against Iran. In any case, she landed in Vancouver. The Canadians took her into custody, and she was under house arrest for 4 years while the United States and Canada and China battled over whether she would or wouldn't be extradited. And ultimately, she was sent back to China. But in the intervening period, China imprisoned 2 Canadians on what appeared to be totally trumped-up charges. And it became a very heated issue in Canada, to your point, Matt, that completely changed Canadians' perspectives about China as a willing partner, as a potential ally, as a source of economic growth. And now all kinds of other things are being brought to the surface, like these allegations of interference and infiltration, I should add, on top of it, into Canadian domestic politics.
This story that you wrote, I always think it's so much U.S. and China, but it's not. You're realizing China has complicated relationships with a lot of other countries.
Oh, not just with Canada, where there is plenty of evidence to suggest that infiltration and interference was taking place, but also the UK and Australia. And I should point out that between the United States, Canada, Australia, and the UK, you have 4 of the 5 members of the Five Eyes, right? The only one left out is New Zealand. And for all we know, I'm not, making accusations here, but they may have been active there as well.
Yeah.
I mean, even if they weren't, it's already
well,
bad
those
enough.
5 nations share intelligence.
Right.
Exactly.
So it would stand to reason they might be.
Well,
that we don't know exactly what's motivating.
What do you
precisely
think?
What's motivating China to do these things? We have a general idea.
Quickly.
Slightly unrelated, but the thing that we've been debating before you came in is, are they going to stimulate the economy? And that's what I think the market's been waiting for at least half a year now, and it doesn't seem like they're going to.
Well, they're taking baby steps, right? They're propping up the real estate sector. They've just given property developers a holiday on loan repayment for yet another year. So they're beginning to move in that direction. But you're absolutely right. We haven't seen anything in the way of
large scale
big ammunition. No, not yet.
Well, welcome back.
Thank you.
Always
Great
good.
to be here.
Great, really fun.
Until next Monday, I hope.
We hope. Eric Schatzker, of course, editor-at-large here at Bloomberg News and Bloomberg New Economy editorial director right here in our Bloomberg studio.
All right, let's get a check on the latest world and national news. For that, we go behind me to Dan Schwartzman in the Bloomberg 1130 newsroom.
It's a great view from here, Carol and Matt. And let's get to some breaking news coming out of NATO here. In terms of unity, Turkey finally agreeing to advance Sweden's bid to join the coalition after they received certain assurances. The breakthrough follows months of back-and-forth negotiations as Turkey's been unhappy with Stockholm hosting supporters of Kurdish separatists in its country. President Biden has kicked off his European tour with a stop in England, where Biden met with King Charles III, as well as British Prime Minister Rishi Sunak. Reports say Sunak and Biden talked about the war in Ukraine, including the U.S. decision to send cluster munitions to aid the Ukrainian offensive. U.S. Special Presidential Envoy for Climate John Kerry, accompanying the president on the trip, met with climate experts. Kerry tells us what his mission is.
When scientists are telling us that they are terrified by what they're seeing, and when we hear those same scientists telling us that we are in uncharted territory, this group has come together to try to figure out, okay, how do we deploy the funds necessary to invest to create the new clean energy economy?
Kerry also meeting with private company leaders as well in London. The Kremlin reporting that Wagner mercenary group leader Yevgeny Prigozhin, along with his top commanders, met with Russian President Vladimir Putin just 5 days after the June 24th short-lived rebellion by the group. The president's spokesman Dmitry Peskov claiming Wagner pledged loyalty to Putin and said they'd be ready to fight for Russia. Peskov says that in all 35 people were present at this meeting. Around 14 million people still under flood alerts in parts of the Northeast and New England. New York's Hudson Valley recording close to 10 inches of rain just yesterday. That's more than the usual amount received for the entire summer. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Dan Schwartzman, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg, and we begin with a developing story. Berkshire Hathaway Energy is buying Dominion Energy's 50% stake in the Cove Point LNG business and a transaction valued at $3.3 billion. Berkshire will increase its stake to 75%, with Brookfield Infrastructure Partners holding the remaining 25%. The stock market kicked off the week on a cautious note. Traders are sifting through remarks from a slew of Federal Reserve speakers while awaiting key inflation data beginning Wednesday and the start of the earnings season. S&P today higher by 10 points, a gain there of just about 0.2%. Dow Industrials up 209. That was a gain of 0.6%. And NASDAQ up 24 points. That was a gain of just about 0.2%. Russell 2000 index of small cap shares advanced today by 1.6%. 10-year yield 3.99%. We had the 2-year 4.85%. Spot gold, little changed, up 24 cents the ounce to $19.25. West Texas Intermediate crude down 0.9%, 73.19 a barrel. So again, recapping here, stocks higher, S&P up 10, a gain of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Matt Miller live in our Bloomberg Interactive Broker Studio right here on Bloomberg Business Week. Well, talk about a pretty successful launch, Matt. It's been confirmed. Meta platform rocketing to 100 million users in less than a week.
The Threads.
Threads. Sorry, answer to Twitter.
Yeah.
Threads.
Yeah. I've been thinking about for the last few days companies getting to 100 million users, because somebody told me it took Uber like years to get to 100 million users, and then ChatGPT did it in 2 months. And that was, someone was telling me the stat to show me how quickly ChatGPT has grown, but then Threads did it in 5 days.
Pretty remarkable.
And it is pretty remarkable. It's understandable because all you need to do is kind of click one button from your Instagram account. You know.
It's still early on. We've got a great roundtable to kind of get into because Evercore ISI coming out, Mark Mahaney, part of that team, and saying that it could generate about $8 billion in annual revenue over the next 2 years. So let's get to it. With us is Mark Mahaney. He is Senior Managing Director, Head of Internet Research at Evercore ISI, on the phone in San Francisco. Also with us is our own Bloomberg Intelligence Senior Technology Analyst, Mandeep Singh, with us in our studio. Mark, let me start with you. Talk to us about this call, because you are thinking, you and the team, that Threads will reach close to 200 million daily active users and generate that $8 billion in annual revenue.
Weeks?
Talk to us about this call.
Well, we'll see. But it is impressive how quickly it's ramped up. And there's at least two major advantages that Meta has in terms of rolling out a public marketplace, real-time news and commentary app, kind of like Twitter. The two major advantages.
It's exactly like Twitter.
Yeah. Well, the one is that they start with a huge installed base just on Instagram of 1.5 billion, roughly, daily average users. And the second thing is this is a company that's very good at monetizing, online engagement or online usage, certainly relative to Twitter. I mean, I think their average revenue per user is 2 to 3x that of Twitter, at least last disclosed by Twitter. And that's because they put more effort into it. They've got more data scientists working on creating ads, targeting ads, and finding audiences against which the ads are most effective and most relevant. And so those are two big structural advantages that Meta has. Now, whether 100 million people who've signed up so far really becomes 200 million daily average users, now that's a big gap still. You can get to 200 million, but the question is people who've signed up, but how many of those are actually using it on a daily basis? I mean, there are about 250 million people that use Twitter on a daily basis. So that's really kind of TBD. And I think for that to really happen, we're going to need to see much more than what Threads has offered so far. Right. I mean, it's nice, good functionality, but it needs to be better than what Twitter offers.
Mandeep, let me get your take on this. I signed up right away just because Instagram made it so easy, but then I realized it's exactly like Twitter. I don't know how that's legal. And it was just as like dull to me and annoying as Twitter. So I deactivated my account already.
It almost
These are Matt's
feels
views,
like
nobody
everyone is
else's.
rooting. You're rooting for, an alternative platform here. And part of the reason is Twitter has changed its algorithm so much to the point that they have alienated their creator base. Like the creator base had a certain following, and right now, if I go to my feed, I don't see the people I follow. It's totally random algorithm, and that algorithm has changed so much that every creator is like, why am I on this platform? And that's where there's a real risk that if the creators are able to build their followers quickly on Threads, I think it'll be hard for Twitter to bring that traffic back.
They also changed TweetDeck, which I'm really ticked off about. But Mark, just because this is part of the, I think,
But wait,
conversation.
there's no TweetDeck for Threads.
No, not yet.
Okay.
But Mark, the point is, and I think this is what we're getting to, just because they attract doesn't necessarily mean everybody's going to be really productive users or, active users, correct? We just don't know. Time will tell.
Yeah, no, that's right. And again, there's interesting features and functionality. I guess one thing I'm trying to do is figure out who are the biggest followers on Twitter, and there would be some tipping points. And amongst those top 5 followers, I think, are former President Obama, Justin Bieber. If you to see Bieber go over to Threads, that would be an eye opener. Now the number one person on Twitter with the most followers is a guy who I know is not going to go to Threads. That's Elon Musk. But then there are these celebrities like Rihanna and Cristiano. I think this is a soccer player. And so you just want to see people are going to if major influencers move to Threads, people will follow them. And so that's what we're kind of watching. We have some interesting people on Threads so far, influential people like Kim Kardashian. But you need to see how those follower bases build and to see more people go over. And then you want to see the forms and features and functionality improve. And I think Zuckerberg and has been upfront that this is still kind of an early stage product. So let's see a lot of improvements, a lot of product improvements, and then also the one thing that they can do to materially distance themselves from Twitter is really trying to improve the civility of the platform. Leave the politics aside. It's not a political statement. It's that there was just a lot of uncivil content that drove people away, some people away from Twitter. Right. So if Threads can figure out a way to do that, that's a hard thing to do. But if they can figure out a way to do that, that could be a real nice competitive advantage.
Mark, but when you think about, what Meta was trying to do with Reels, pivot to videos, why haven't they integrated videos to begin with? Why the focus on text-based platform right now?
Well, you actually do have, there are pictures, and now you stumped me. I can't remember because I posted pictures on Threads so far, so that's good. And there's always was a limit. I agree inherently with the idea that there's a limit to text-based app. I can't remember yet. I got to experiment. I'll do this right after this segment. I'll see whether I can upload video on there to the extent that as easy as I could on Twitter. There's also some limits on Twitter that you don't yet have on Threads, or at least you get more space to type out your thoughts, to issue your thoughts on Threads so far. But we'll see how this changes over time. So there's just a lot of TBD. I'm just struck by how quickly it's ramped up.
You don't see any cannibalization risk for Instagram or for the Core Blue app as a result of Meta launching Threads?
No, that absolutely could happen. So that'll be another thing on two ways, both on the user side and on the advertiser side. But I want to step back. This is what I call an easy extension for Meta. We're not trying to convince people to put on goggles and follow us into the metaverse. We're just saying, hey, you're on Instagram. Would you like another way, a different way to publicly, follow, interact with other people on social issues? It doesn't have to be your circle of friends either. It can be broader than that. And so far, it looks like there's pretty strong interest in doing that. It's a win and it's a low-risk win for Meta so far.
Yeah, I'm kind of watching too. I haven't gone on it, but what?
It seems like it's evolving. Threads is very much still evolving. Someone told me this morning that they don't have hashtags yet, but that's coming. So I know that Joe Weisenthal was saying he wanted a TweetDeck kind of thing so that he could use it from his desktop, and apparently that's coming.
Yeah.
So a lot of things they're sort of still rolling out.
Yeah. Mandeep, are you on it?
Yes, I am.
But have you threaded?
No, that's the thing. It's still not intuitive enough for me to change my habits.
Right.
It will happen, but hasn't happened yet.
All right, Mandeep Singh of Bloomberg Intelligence, Mark Mahaney, of course, of Evercore ISI. Guys, thank you so much. So appreciate it. This is Bloomberg
Thanks
Radio.
for having me.
company news headlines on Bloomberg Radio.
Bloomberg World Headquarters. I'm Charlie Pellet. Berkshire Hathaway Energy is buying Dominion Energy's stake in a Maryland natural gas export project for $3.3 billion. The deal will bring Berkshire's limited partnership ownership of the terminal to 75%, while a unit of Brookfield Infrastructure Partners holds the remaining 25%. Meta Platforms' answer to Twitter, Threads, has rocketed to 100 million users in less than a week. Mandeep Singh of Bloomberg Intelligence says part of the migration to Threads is because Twitter has alienated its creators. He was interviewed moments ago right here on Bloomberg Business Week.
Like, the creator base had a certain following, and right now, if I go to my feed, I don't see the people I follow. It's totally random algorithm, and that algorithm has changed so much that every creator is like, why am I on this platform? And that's where there's a real risk that if the creators are able to build their followers quickly on Threads, I think it'll be hard for Twitter to bring that traffic back.
And you can hear more of the conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Amazon shares lower today. Amazon was down 2%. on speculation that its annual Prime Day event will likely not be the driver that it used to be for the stock. Again, Amazon lower today by 2% to 127.13. And those are some of the company stories that we're following for you at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio.
Matt Miller here in the Interactive
What?
Brokers studio with Carol Massar.
What?
What?
Oh, that you were looking at me with like.
I'm always
questioning
looking
eyes.
at you, Carol. Mainly because you're the only other person in this
I
room.
was just gonna say. Don't get carried away, Master.
Normally, you're the
Yes.
only other person in
Yes,
this room. Dan
but-
Schwartzman's in here right now, and he's got our world and national news for us. Dan?
Am I brightening it up for you in here, or is it a bad thing?
Yes,
I'm in
because
here?
of your neon green shirt.
It's bright.
If I had known I'd be on the screen, I would have worn a different shirt. But guys, there's a motive still unknown as to why a Brooklyn man decided to go on a shooting spree while riding a scooter in New York City Saturday that claimed the life of an 86-year-old and injured 3 others. Police have arrested 25-year-old Thomas Abreu without incident and confiscated a 9mm ghost gun with an extended magazine. In prison, sports doctor Larry Nassar stabbed multiple times during an assault at a federal prison in Florida on Sunday. He's now listed in stable condition. While working at Michigan State University and for USA Gymnastics, Nassar sexually assaulted numerous athletes before finally being arrested in 2016. The disgraced doctor is serving 3 sentences that'll keep the 59-year-old behind bars for the rest of his life. Around 14 million people still under flood alerts in parts of the Northeast and New England. New York's Hudson Valley recording close to 10 inches of rain just yesterday. That's about what they usually get for the entire summer. Damage to the area includes parts of a Metro-North commuter rail line, while 19 people have had to be rescued in Vermont. New York Governor Kathy Hochul explaining the magnitude of the weather.
Once again, the skies opened up and brought so much rain, 9 inches of rain in this community, that they're calling this a 1,000-year event.
Good news for both of you, by the way, and myself. No jackpot winners for Powerball Saturday, so that means tonight's drawing will be around
There's a Powerball? I had no idea.
Carol, $650 million. It's $328 before taxes. If you take the lump sum, I think we can all.
Would you do lump
live
sum?
on-
Yeah.
Lump sum.
Yeah, like run
No
with
question.
it, right?
And then I'd have
yeah.
Matt be my financial advisor and steal it all. Exactly right.
Thank you, dude.
No, Matt would be good with it. He would be good with it. He would just take.
You would.
I'm very risk averse. I would just put you in like treasuries.
Treasuries,
Yeah.
treasuries, tax-free munis.
Back to both of you now.
Oh, okay. Thank you. We'll take it.
Carol, have you ever played the lottery?
I do play the Powerball when it gets higher.
You do?
I do. I have a set. Yep, I do like 2 or 3 tickets. I don't buy a lot. I have a set sum of numbers that mean something to me, and then I'm like, just do the what is it, random pick
I
or
feel
whatever.
like I've done it a couple times, but then I've never checked to see if I won or lost.
That is so true. And then like I have these old tickets, and I'm like, did I even win
Did
a
I
buck?
win?
Did I win? You never win. We never win. It's always
terribly
actually.
unlikely.
It is often somebody like in Ohio, or
The great state of Ohio.
some random gas station somewhere in America, which I'm happy to
That's
see
how it's
somebody
supposed
won.
to be.
I know. But it would be nice to just.
You don't want it to be some Wall Street banker pulling down $10 million a year winning the Powerball,
But some lowly little journalist in
Yes,
the
it
New
should
York
be a lowly
Metro.
journalist.
In the New York Metro. I kid. What do you want to talk about, kiddo? Do you want to talk about Prigozhin? Do you want to talk about the
The
flooding?
Prigozhin meeting, I don't understand.
Do you know what's the most read story on the Bloomberg?
Putin apparently, after he called Prigozhin a traitor, and ordered everybody
He said,
in
"Come
Wagner
on to my
out of
house.
Russia.
Come on to my house."
He invited Prigozhin and, I don't know if he invited, they showed up, Prigozhin and some Wagner leaders for a meeting at the Kremlin where Putin made them swear allegiance to him.